Hi, welcome to FRA's Roundtable Insight. This is Richard Benuli. Today is Thursday, April 27th. We have Judd Hirschberg back on the program show. He's president at White Wave Trading, a trading company. And he's run several proprietary trading groups with over 45 years of trading experience. He's developed awesome indicators and a repeatable process-based approach for trading the financial markets. Prior podcasts with Judd have focused on his approach and methodology and also updates on the financial markets. So that's what we'd like to look at today, is an update on his latest views of the financial markets, understanding what he's currently seeing and across different asset classes and jurisdictions. Welcome, Judd.
Thanks, Richard. It's a pleasure to be back. And I hate to say it, but I'm pressing up on 50 years.
Oh, yeah. Okay. That's great.
1974, I started
Wow.
when the currencies were trading on blackboards.
Unbelievable. Awesome.
It is unbelievable.
Yeah.
Okay.
Yeah, maybe today we can begin with a view on the indices like S&P 500 and then go from there.
Sure. Let's just go through them. The S&P 500 has been running this whole show, and it's the only level that matters is this level from August 22nd, which was the Jackson Hole Powell pivot to higher rates. And then we had the big sell-off. We came back up, retested it, sold off again. We've just spent 3 weeks trying to come back to this balance line and fill out a long-term point and figure, only to completely reverse it in about 16 hours. So the S&Ps are running everything. They're running the entire board, and I think they're running a lot of the emerging market stuff too.
Mm-hmm.
To give you here, I'm going to pull this off. I'm going to give you a picture of the NASDAQ. We're back over the Jackson Hole high again. And we've been up here a few times, but we haven't had confirmation from the S&Ps. So until I see confirmation from the S&Ps, that's what it's going to take for me to say we're going to go a lot higher. I mean, I have room for another couple of hundred points in the NASDAQ and a little bit farther in the S&Ps, but it all gets down to the Jackson Hole level in the S&Ps.
Yeah.
Here's the Nikkei. This is what Ira's been focused on. The Nikkei is holding. I mean, and it looks great. I mean, it holds all its retests right where it's supposed to. The weekly is trying to get going. And given that Asia's closed Sunday night and Europe's closed Monday, and it's month end tomorrow, I don't have a big desire to fade the capital flow.
Yeah.
I know that the one interesting chart,
and tonight we have the announcement by the Bank of Japan. So that will be interesting. Any technical indicators like on relating to the currency or cross currency?
We'll get into that. I mean, first here's the Nikkei JGB on a quarterly. So it's right up to momentum resistance again at the top of this value area. Now, whether I think it all goes at the same time. I think the Nikkei goes, the S&Ps go, it all goes.
Wow.
28 here, let's get back to this a second. It's 28 28,805. So if we start sustaining above 28,805, then they'll run it up for a couple of days.
Wow.
So that's the short-term number that I'd be focused on. Now I went back and I just played around with some log charts for DAX against the bonds. And what I like about these is it's a percentage chart. It's going to look a lot different than a linear. And I'm going to show you what that difference is. You see, a linear chart gives you a very different look. What I wanted to do, I went to a log chart because I wanted to see the percentage moves.
Okay.
And this is to the 2000 high. So that's the NASDAQ high from the inception of that whole bull market. And now we've started up above that. So there's plenty of room for Europe. Now I did the same thing with the DAX itself. This is another log chart. And as you can see, we're knocking on the door up here against this 16,295 level.
Mhm.
And again, if the S&Ps break out, everything goes. When you look at a linear chart, the reason I'm doing the log chart for the percentages is you can see that, you know, you get totally different numbers. And I wanted to look at the percentage of this first big swing. And I've done the same thing in the gold, which gives you a much more accurate, and we'll get into that later, but that gives you a much more accurate swing.
Yeah.
So that's, you know, I looked at some of the ETFs. You know, Hong Kong doesn't do much for me other than, you know, the initial low last October. That October low was the 618 of the Plaza Accord in the euro. It was the 50% of the life of bond futures. It matched up with a half a yen. Yen futures. You know, there was, I don't know, there was, oh, and a double bottom in the sterling. Life of sterling double bottom.
The convergence, massive convergence.
Huge convergence.
Indicators, yeah. Wow.
And those are the, you know, there was a Druckenmiller article that came out in the FT the other day. That's the kind of stuff that he looks at on a global macro basis if he wants to
Yes.
take a trade. I mean,
Yeah.
you had him in October. The whole
Yeah.
board's been, that's been the low and everything.
Yeah.
And that's, you know, it really gets back to, for me, is the euro. I'm going to show it to you here one more time.
The euro, US dollar.
Yeah, there's the Plaza Accord low of 1985. So if anybody talks to you about currencies and they don't do Plaza Accord Fibonacci work on
Yeah.
their long-term studies, they have no concept of currency trading at all. I would hang up the phone. Here.
Okay. Yeah.
So I'm looking at this 110.5 level, which is a big, you know, big average here.
Okay.
It's a 50% level for this last swing. And you also have 109.96. And we're kind of caught right now going into month end and the beginning of next month, which way we come out of here. But whichever way the currency goes, I think you just go with it. And if, you know, I've been bullish the euro for a while on the breaks, and we start closing over 110.5, you know, we're going to rally 2.5 to 5% in quick order.
Wow.
So that's, I'm looking, right now you got a 50 pip area to focus on. Euro yen.
Yeah, that would be good.
Ira wrote a blog, and we had spent some time in the room looking at that's 128.41 or 148.41. I thought it could go up as high as whether it came back up here to 149.78. I wasn't sure which high to pick.
Yeah.
If it completes this whole swing and it's good, and the euro goes, you're going to see 156.35 minimum.
Wow.
So Ira thinks if this goes up, it's going to be a real problem for Lagarde, but we'll see.
Yeah.
So we looked at that currency for us. So then we looked at Swiss yen for confirmation. And I was trying to get a sense of where it could stop up here. The high close in the spread was in 79 at 150.46. So January 80, that's the high of the gold. And this has been a pretty good proxy for gold. Gold broke out of its point and figure to the upside, I think in the PM fix in 2001 at like $263.
Yes. Yeah.
And that's basically a gold chart right there. So this whole 150 and a half, 151 area becomes big, and this is an annual chart. So again, I'm not real crazy about picking a high up here. And as you go down to the shorter time frames, you can see where it came up here to the last year's high and rejected. But you don't have confirmation that this is going down yet. And that was technically, I just didn't have a really tight area to give it a go, to say I want to sell a euro and buy the euro. Same thing with Swiss yen. And the gold's caught right now. The gold's caught in a $45 range and almost 50. It's in a $40 range. And whichever way it comes out, it's going to go. Let's see.
And does that have the same pattern for other precious metals like silver and platinum?
No, they all look different. So gold itself, this is a daily continuation. So it really matters what chart you're looking at right now. So this is a 2063. So the high the other day was 2063.40 on an active.
Yeah.
And that's, when we were up there, I thought that was not a good high. And we talked about it on that Thursday, because what I didn't like about it was there's been Friday sellers in the metals. And that's Friday. So it opened up there Friday night and then had a pretty good sell-off all the way back down again. So that was $83 on that break. So for me, it hasn't quite set up yet. And what I liked about the the trade the other day was that I like being, the last time was long platinum or long gold against the platinum, because the platinum rallied $40 on a risk off day, and I didn't understand that at all.
Okay.
So the platinum itself is absolutely nowhere in a long-term chart.
Hmm.
So I'm not, I'm not that bullish platinum.
And the silver, how does that
All
look?
right, well, I didn't even look at the silver because the silver's in the middle of nowhere and you don't want to trade it.
Okay.
And I'm not sure what to trade it against, so I just left it out of the loop.
Yeah.
And here's copper
Yeah.
in yawn. And here again, I don't know what to do with the chart because you don't have any trade location. You know, it already had a topping pattern last, beginning of last year. And that's when we started risk off in the indices. So that matched up. But in here, you go back into it and it's very difficult to pick out a spot where you really want to hang your hat. Okay, come on. There it is. You know, I suppose if you thought that you wanted to be risk on and you wanted to be long copper, this would be the spot.
Mhm.
But I'm in no hurry to do that trade. And a lot of this, you know, especially the gold, we get back to this again.
What is this
This
chart?
is 30-year yield
Okay.
on a semi-annual chart. So what I did was I did the Plaza Accord fibs and the yield from 1985. I didn't take it from here. I took it from 1985
Yes.
to the 2020 blow off. So we went to perfect cloud resistance, and that resistance happened to matched up in October with the 618 of the euro,
Yeah.
the double bottom in the pound, the half of the life of bond futures, the half of the life of yen futures. And these things don't happen that, you know, they don't happen out of the blue. They're all intertwined.
Yep.
So I don't have a really good look at this, except that I know I have a matrix level in the yen futures. And basically I need right now under 129 close to get back above this quarterly cloud to break out to higher yields. All I have right now is congestion.
Yeah.
And I'm going to show you a couple of point figures. Here, let me just so I just want you to just get a sense of, all right, come on. Here's the goal on a point and figure. And I like looking at these because it shows me the price.
Yes.
But you can visually see 80. So that's $1,980 right there. And it's going to take above 2020 to break out to the upside.
Okay.
So right now it's in a congestion phase and I don't have a clear signal to do anything with it.
Okay.
And this is a 32/3 in the long end of the curve. And here again, we're going sideways to catch up to the averages.
Yeah.
And this is another consolidation pattern where yesterday's high fell short by about a half a point. And today on the downside, we fell short by about a half a bond point, breaking out of this range. It's just a 3-point range back and forth. So until we come out of here, you're not going to get a signal from the bonds.
Okay.
All right, so the commodities, you wanted to look at the grains.
Yeah.
Here's it. Here, if you looked at a really long-term chart in the soybeans, you're a buyer around $13. And we talked a week ago when the beans were still rallying. Last week they went up to momentum, came off. This is I think the mates have to get off the board before you can try to pick a bottom in the grains. There's just too many things going on in South America and in the Midwest. You'd think that the grains, just because of the flooding on the Mississippi, would be going up, but I guess everybody thinks that Putin must be selling a lot of grain.
Well, maybe a good year in South America or something.
Yeah, so until that's over with, until we get into the new crop in the US and get past the May deliveries,
Yeah.
I don't think that you're going to find a bottom in the grains.
Does that apply to all the grains, like the major grains, wheat and?
Well, the wheat looks, the wheat looks like it can bottom first.
Okay.
There's not as much downside of the wheat. So somewhere down around just below $6, I'd look for the 590-ish. I think that you'll start getting
Lower risk to get in.
Yeah, you're gonna find that it's getting juicy enough for people to want to get involved.
Okay.
So I'm just waiting for that. And I think as you get closer to the second week in May, so I think you got another 10 days to 2 weeks. And then I think you look for a bottom.
Okay.
The sugar was interesting that you asked about that. This has just been huge up. This is life of sugar.
Huh?
So I went back and looked at a much longer time frame chart, to see what it was trying to do. I'm not buying it here. Let's put it that way.
Yeah.
But when you look at sugar and real, which is, let's see, what chart was this? Yeah, this is another log chart, okay? So I'm looking at the percentage moves from 1999 to the January, this basically January 10th high where it blew off. So if you look at this, sugar can go a lot higher, especially denominated in real.
Uh-huh.
If I change it to a linear chart, you can see that the thing's already been parabolic. But you don't get a good target looking at a linear chart. You have to look at a log so you get a percentage moves. All right, and we can look at the the grains in different currencies if you want, but it's pretty much, I think you just have to wait for it.
Yeah. Can we take a look at the like energy, oil and gas?
Yeah. Crude's been trading off its short-term averages in here. This is the production cut. We rallied into a Wednesday high. That pink bar is a Wednesday. So I like looking at midweek trend changes. And I'm always looking for a midweek trend change. If it's gonna change direction, the technical models will start to try to change midweek. So yesterday we had a midweek low in the S&Ps. They're trying to hold and stay up. The oils rolled over. It needs above, I don't know, 75.25, basically, today's high, to show you that it can rally back again.
Okay.
But it took a long time for it to come down, and back and fill. And everybody, I think part of it was that everybody started shutting down gasoline production because they couldn't make money with the Saudi oil. Nat gas. This is one that I don't want to chase, but I think the last time we talked, I liked it around $2, and it's tried to bottom a number of times. And I've been looking at it against the crude. So that's long oil, short nat gas. Let's let this thing work a second. Hold on. Let me get the right chart. There we go. It's not the right one. The daily continuation, I think I have to look at, or I'm not getting the right high. Yeah, here we go. This goes back to 88. That's the negative oil print in January. So the question is, do you use that chart? There's the oil, gives you the negative print.
Yeah.
So if you go to a daily continuation, I'm going to show you the difference here. I don't know. There's another way that right now my mind is not working. It's late in the day. Sorry. What I'm looking for is a different low. That's it right there. Okay. So you saw the negative $40 print. That's real. Okay.
Yeah.
Now so I do the swings two ways because I want to see how they line up. The low for deliverable oil was $6.50.
Yeah. I know it.
Okay,
Yeah.
so that's a different low to this high. And you can see where that 83, that 200 day is moving is aligned with that Fibonacci work again, coming back up
Yes.
for this whole swing.
Yep.
So the game is to try to the game I play is I'm trying to see how the market's moving from point A to point B.
Mhm.
So I spent some time looking at my charts to try to figure that out. And CQG charts are the only way that I can see that kind of data. So that's why I use them. I know their currency data is correct, and their spread bars are terrific. So I can get looks, and I can look at all these currencies these commodities denominated in other currencies, and I spend a lot of time doing that.
What's the next level higher if it clears 75 something you mentioned, like the next Fibonacci or?
Well, it's just going to be a short-term trade back up. You know, you look at the weekly here, and you know it came down to weekly momentum and held. And if we start getting back above this, and it'll start moving a dollar and a half back up.
Yeah.
So I just think it's going to get into a big trading range
Mhm.
for a little bit.
Yeah.
And here. There's crude and yuan. It's basically the same chart. So this whole sell-off matched up with China demand waning because they're not buying Western oil.
Yeah.
That's what that tells you.
Yeah. Yeah, because this is more WTI delivery in Cushing, Oklahoma.
Right. And I don't have a way to track all the dark oil that the Russians are selling and for what price and what the Iranians are doing. So all of this is basically we have that in Brent.
Yep. And any thoughts on like emerging markets, Mexico, Brazil, Malaysia?
Mexico, Brazil, Brazil tried to bottom yesterday. All these Mexico and Brazil are mirroring the S&Ps.
Mm-hmm.
So until we break out in the S&Ps, I don't think these can go anywhere. It's really the Nikkei and the DAX that look the best.
Yeah.
And the Russell's trying to stabilize. But here the Russell tried to stabilize this morning. I don't trust it going into these fibs.
Uh-huh.
So when I see something like this, I need the market to show me. We're coming up to the top of value again in the S&Ps at 4170, which is the 400-day moving average.
Yeah.
There. Where is it? I don't know. I don't know where my moving average went on this one. But 71.5 is the 400-day today in the S&Ps.
Yeah. Interesting. And any indication, as we mentioned before, like that there could be a trend in looking at more individual names versus looking at the indices.
Well, some of the names, look great. I don't want to chase Microsoft here. And this is a problem. It's got a huge week. And, we talked about this and not selling any of these tech names. Yesterday's low in the S&Ps at the end of the day was perfect. I mean, I was waiting for Microsoft to match up with the high 60s to 72 and 40, 72 and a half in the S&Ps. And they both did it at the same time.
And took off.
Yeah, and then it just went. So, this is just classic Wednesday trading where you're looking for the matches in the big cap tech stocks.
Wednesday shuffle, you call it, right?
Yeah. So
Midweek shuffle.
Here's what I was looking for all day, right there. I was looking for that zero to get onto the top of the cloud on a 25 by 3-point figure.
Yeah.
And it did it at 1 or 2 minutes to 2.
Wow.
With Microsoft filling the gap, and then the whole world just reversed.
Yeah.
So those are the kinds of things, markets don't move. They're not, one market doesn't move by itself generally. They're all intertwined.
Yeah.
Tesla, this 160 level in Tesla is monumentally big. For a number of reasons. I put out the chart a while ago. First of all, it's a major retracement, a 618 for the life of Tesla, and it's also the half of the last couple of years in Tesla.
Mm-hmm.
So you have multiple things lining up at the same number. So all that tells you is basically 158 and a half to 161 and a half is going to be the pivot for Tesla, in which, if they can stay underneath it, it'll be weak. If they stay above it, you buy them before you sell them.
Yeah.
And I don't know. I mean, that's just the simplest way to explain it. I'll have a hard level to look at, and then I'll just have to wait and see how the price there responds to the indices.
Yes. Yeah, this is pretty.
Amazon, after the close, we had we did that work. And it was we were looking at 123 or 120, 122 to 124. So what swing is that? That's from the 21 high to this year's low. It's right into the mid averages.
Mm-hmm.
And it's that last high. You just got the stops over the October 22 high, and now you got to see if it goes anywhere. The target was right there on the weekly from the last breakdown, which is 124.74. That's where it went in aftermarket on earnings. So it was a perfect place for it to reject.
Yeah. Interesting. This is great. And maybe a last question on US dollar, any indications, even medium term? I know like Druckenmiller has taken a short position right on the US dollar. Any?
Well, that's why I went back and we looked at the euro, right?
Yeah, the euro.
Last record fibs.
Earlier, yeah.
Okay. So Druckenmiller is just the type of guy that if he's going to do a trade like this, and he's as global macro as you get. And I guarantee you, he was watching it. Because this is the only swing in currencies. Only swing that matters. That's why I don't look at the dollar index. I
Yeah,
look
right.
at that.
It's right. It's not too big.
So you can see here, even on the annual, it's at 110.5.
Mhm.
That's that momentum line on the yearly. I just don't know how it comes out of here, but if we start coming up,
That's
you know,
it.
then we
Yeah.
can have a pretty good,
Right. Good run up there. Yeah.
we can have a further run. I think the last time we talked, I was looking at 109.5 to 110.5. We talked about it, that was a quarter ago. We were talking about that level to buy dollars. And you got, you got a 5% rejection off it.
Yeah.
Yeah, here, when do we go up there? In February.
Yeah.
Yeah, and it rejected 5%. Now it's coming back up. You start closing underneath it, over it. I think you're looking for 5% the other way.
Yeah.
And there are a couple of places where they're going to jam everybody. 112 will be one of them because it's a 200-week moving average. So, this is just consolidating in here. I don't know which way it's going to go. But I've been thinking that it was going to break out to the upside. The yen's tough because it's not confirming anything just yet. It's still stuck.
I see.
So that's why I'm more focused on the euro itself. And, I understand the argument that Japan's got a competitive advantage with a weak yen, and it should be good for their stock market. But when I look at the longer time frames in dollar yen, it's not telling me I want to do anything yet. It's just not giving a clear look as to risk. And then you go back to euro yen, and it looks like it wants to go higher. But it's still struggling around the 2000, the October 22 high. Until we start getting above it, I don't know which one's going to lead.
Yeah.
The commodity currencies don't act particularly well, and that's all because of the grains and everything else and iron ore and no demand from China. And it's Europe against the commodity currencies. There's Euro Aussie, Euro Kiwi. So everybody's been buying Europe and selling the commodity currencies.
Yeah.
Euro CAD too. So we'll all wait to see what happens. I'm sure I will write about it.
Yeah. Well, yeah, this has been fantastic, Judd, on the analysis, great charts. And how can our listeners and viewers learn more about your work? And you can explain, there's a special offer for a 2-week trial as well to your service?
Yeah, usually I let people come in for a month because what we do isn't easy because we're relationship traders and we try to analyze the capital flow to see if we can line up trades to get on.
Yep.
So we don't trade very often. We do have some guys in the room. We have options traders, people that day trade the indices, people that are just looking for opportunity and they don't care what it is, whether it's in the interest rates or the metals, nat gas, could be anything.
Yeah.
So we talk about a lot of different things early in the room, and this is how you can reach out. All you have to do is put your, go to whitewavetradingstrategies.com and put your name and email in. That's all that's required. And
Yep.
they'll get you on invite list.
Yeah, it's great service. Exactly. Very powerful. And also the discussions in the room are fantastic.
Yeah, they get, you know, there are a lot of people good at a lot of things that I'm not, and that makes for a good room.
Yep. Great. Thank you so much, Judd.
Well,
This is
thanks
great.
again, Richard. It's
Yep.
always great to catch up. And I love your podcast. They've been fabulous.
Oh, thank you so much. Yeah, thank you. Take care.
Okay.
Bye-bye.